All right, there you are. Welcome back to Market Day Report. I'm Scott Shellady, and I'm happy to be here. I'm otherwise known as the Cow Guy. Thanks for tuning in. If you're just tuning in, if you've been with us all morning, it's going to be a good one because we've got, I'm sure you've heard, WASDE Wednesday. I'm the most boring man in the world to have to say it now. We've only got about 12 minutes left. Let's take a look at what these markets are doing so we know where we started, and then we'll have an idea about where we went, okay? We've got an 8-cent rally, 8 3/4-cent rally in March. Corn, 641. Remember that, around 641 is where we're going into this number. 8 3/4 cents higher in March. Maize up 5.5 cents, 639.5. Okay, how about beans? Where are we at in that? We got 17.5 cents higher in March beans, 1586.5. 15.5 cents higher in May beans, 1588. So that's a good idea about good judge. Let's call it 16 higher as a little average there, but that's what we're going to have to keep an eye on once we see these numbers come out from the government. How about wheat? Chicago wheat. So these are all good boards, man. Everybody's worried about something coming, surprising us to the upside, it looks like. 5 1/4 cents higher in March, 784. That's March Chicago wheat. 789 is last in May, and that's up 5 cents as well. Moving right along to the hard red wheat in Kansas City. This one's up 9 in March, 810 1/4 is last. May is up 7 1/4 cents at 811 3/4. So that'll give us an idea about where we start with the Kansas City hard red. How about Minneapolis spring wheat? That's also up a dime, right? March is up a dime at 950.5. May is up 9 3/4 cents at 946 even. And then lastly, let's take a look at cotton before we go over to our next guest analyst. Cotton is down 100 points to 126.15. All right. So let's bring in Ryan Kelbrants. Ryan, what are your thoughts on this WASDE Wednesday and what's happening in those energy markets? What do you got for us?
You know, the energy, we did have the EIA come out with their weekly ethanol numbers. They did have, I'm going to start with gas demand. Gas demand was up 900,000 barrels per day last week, above 9.1 million barrels per day being used in the United States. That's well above the 4-week average of 8.5. Ethanol production dropped a little bit, 47,000 barrels a day, but the ethanol inventories, ethanol stocks dropped by over 1 million barrels to 24.8. So margins slipped a little bit this week. They were down about 7 cents. But I think the people are getting back on the road. People are driving. We did have an announcement earlier this morning, 8 a.m. from the USDA, that the Chinese bought another couple shipments of beans, and thus November beans hit new contract highs. East corn hit new contract highs, and the term super cycle continues to move around here. So, you know, we're getting towards that $100 level for crude oil. The energy markets seem to help out the soybean complex, and we're higher across the board.
Looks like we're kind of leaning that way going into the report. I mean, you know, it's depending on who you are and what you're looking at. A lot of folks looking at that South American bean production number. I think that's going to be an interesting one. And I don't know, maybe we get surprised at the upside, but this market is defensively trading higher, if you know what I mean.
Yeah, I think that a lot of these private analysts, there was another private entity this morning that lowered their Brazilian soybean production number to 133.3 million metric tons. USDA attaché came out earlier with 136. The January report showed 139. I think the markets have baked in a smaller South American crop. I would guess, you know, 134, 135 is a fair estimate there. But we're going to see what the USDA says when it comes to the soybean stocks in the United States. That's going to be, I think, a focal point of where we're at, because the crush numbers have been excellent. NOPA crush was another record, the last report that they put out. So that's going to be one that I'm going to look at first.
All right, and, you know, combine that with the exports. I mean, things look tight. So, I mean, that's going to be something. What I'm just trying to gauge is, you know, I think we've got the average estimate at 133, maybe just a little bit higher, 133.5. But, you know, it'll be interesting to see how many people believe that if that comes out at 133, how the market reacts. Is that going to be a stair-step reaction, like everybody thinks, okay, great, they've acknowledged, and now they'll continue to stair-step this lower? Or, oh my gosh, I would have thought it was going to be a lot lower than that, and the market, you know, sells off. We'll see. But it's going to be an interesting day. I really appreciate you being on to help walk us through some of that. That's Ryan Kelbrants. He's with CHS. Appreciate you being on the show. We're going to go away, take a quick break, pay some bills, and come back and talk livestock after these messages.